Good morning, afternoon or evening depending on where you are in the world watching this right now, and welcome to the first video on my investment portfolio channel. And essentially I created this channel just to see how my portfolio performs on a weekly basis, and maybe in a year's time I can come back and watch these videos and see how stupid I was in my investment decisions and how much knowledge I can acquire between now and then. So the format that I want to run with this is obviously to upload a video every week to see how well or how poorly my portfolio has performed, and look at the top winners and top losers within that. So as you can see, my platform of choice is Trading212. So without further ado, let's get straight into it. So my portfolio currently stands in the green with an unrealized turn of £186, which equates to roughly 3.5%. So one of the top movers in my portfolio this week was British Land, which has gone up about 16.5% this week. And that might be a surprise due to the fact that they've announced that they've lost or made a loss of £1.1 billion. Obviously, due to the environment that we're in right now, people have been struggling to pay rent, and they've actually said that 40% of their retail customers have had their rent deferred, which cost them about £35 million in total. So it hasn't been fun times for them during this pandemic, which the same can be said for all of us really. But one piece of good news that they did receive this week was from a Canadian investment giant, so a company that goes by Brookfield Asset Manager. They've disclosed a 7.3% stake in British Land, which obviously indicates that they are looking at the long-term aspects of things, and that post this pandemic, hopefully British Land can prosper in their business and return to business as usual with retail companies, offices and other assets that they own. They can start paying the money that they owe from renting it. And even though British Land is one of the largest property development companies in the UK, if I'm being honest, it's not a company that I'm looking to hold on for the long term. I think when they start to return a profitable amount for me, so essentially when they turn green for me, I think it's a stock that I'm looking to sell. And the main reason for that is just because it's not a company that I'm really interested in, and I think I can get a better return elsewhere. I mean, they do pay a good dividend. If we just have a look at their dividend yield, which is nearly 6%, I mean, you can't complain with that, but their EPS is negative, and it's just not a company for me, I'm afraid to say. And if we take a look at the next company, another top winner this week, which is ADP, Automatic Data Processing. So they've gone up around 8.6% this week, and I think this is mainly due to a rating that they've had. So 15 analysts have come together and given this an average rating of hold, and along with that, the range of prices that these analysts have provided or given to ADP is between $188 and $135, which averages to about $156. And as you can see at the moment, ADP is trading at $146.55. So this gives a possible upside of 7%, which means this company has a fair way to go in order to reach that. And along with the bullish sentiment of the market, I think that's one of the reasons why this company has gone up 8% this week. Okay, now moving on to the third company, InMode. Now this is a company that I actually invested into this week, and as you can see, it's gone up 11%. It's a company that I found on Simply Wall Street based on the screener information I provided, and it's a healthcare company that has this proprietary apparatus, I guess you can call it, and what it does is basically removes fat from your skin. And I believe they have a bright future ahead of them, looking at the fundamentals of the company. And at the moment, I think they are also undervalued as well. I couldn't find any news that provided a good enough reason as to why this company has gone up 11% this week. But if we have a look at the overall trend of this graph, we can kind of see that follows the major indices, in that around February March time we had that big decline in price, and since then it's steadily been going up. So I guess InMode is a company that generally follows the fluctuations of the major indexes like S&P 500. But yes, a company that I'm looking to hold on to for the long term and see where we can go from there. Okay, now that we've got the good news out of the way, let's take a look at the big losers of my portfolio this week. Starting off with Advanced Micro Devices, AMD. So that hasn't actually fallen too bad this week, roughly 3%. And there wasn't too much bad news around AMD and microchips in the market this week. Specifically, I'm talking about AMD and Nvidia. But both of them have dropped this week, and the only explanation that I can really place on this is the market correcting itself. Of course, what goes up must come down, and I guess that's one of the reasons why AMD has fallen this week. From a fundamental standpoint, they still look like a great company to invest in, and as a investor that likes to average my way into a stock, this is a company that I'll continue to invest in for the long term. Now the next company, wow, Carnival. So this is another company like InMode I invested into this week, and that is solely based on the reason that the price has dropped dramatically. And this is a stock that I count as a risky stock when it comes to balancing my portfolio. So I only allocate 5% of my overall pot to risky stocks. So I'm not going to invest too much into Carnival because admittedly I don't know too much about it, but I thought, look at that drop, I thought it's going to go up eventually. I know that's a terrible reason to invest in a company, but the price has fallen so much that I think this is a good time to allocate a small percentage of my portfolio. I think that's the way to do it. If it's a company that you believe has high growth potential, but there's a considerable amount of risk to it, if you want to invest in that type of company, it makes sense to allocate a small percentage of your pot to it. So that's what I've done here. But Carnival is a stock that's been fluctuating like crazy over the last couple of months. So it's just a company that I'm going to continue to put a small amount of money into and just see what happens. Hopefully after this pandemic is over and people start to take more holidays, the price of this stock can go back up to where it was pre the coronavirus. Okay, and the last loser that we'll be looking at this week. Loser makes it sound so demoralizing for that company, but Disney is the last faller that I'll be looking at this week. So Disney has gone down by roughly 0.5% this week. They are suspending their fast pass service and pausing ticket sales, and also on top of that cancelling existing dining reservations at the theme park as they prepare to open their Florida resort on the 11th of July. Now that is some good news for the company, for both the company and people that want to visit Disney. But of course there's going to be restrictions into how people will be operating around the Disneyland resort in terms of keeping that 6 feet distance between people. I'm guessing the people that work there, the staff, are going to have training on how to minimize the spread of this disease and things like that. So yeah, not much news around that, but yeah, I guess that's good news for everybody that we can see companies are starting to reopen their resorts, their restaurants and their businesses. But I think the thing to be wary about is hopefully they don't open it too early. I mean, we can't really tell how bad this is going to get, and hopefully we don't experience a second spike from companies opening too early. Just got to make sure that we're not doing anything stupid. That's a generic update on my portfolio this week.